Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Hey guys, let's update our view on the euro currency. So you can see that we have got this deep action to the downside, and market in fact has reached our ultimate level for potential retracement that stands right at the weekly pivot support one. Although the way how market has reached it is not very good for from the bullish perspective, since you can see this really thrusting downward candle that opened at the high and closed at the low and almost has erased this upward action to the upside, so they are almost equal. This candle is slightly smaller, but anyway, this action to the downside is not very good sign for upward continuation. Personally, I prefer the action some more gradual, but we have what we have in reality. So since market at this support, we now have to investigate the possibility of possible reversal to the upside, whether it will happen or not, what risks we could meet, and other moments of the possible upward action. But anyway, we have the huge advantage here, because if even we will decide to take the long position, our risk will be really small. So that is low approximately stands at 134.7, currently market 134.45, just 40 pips. So because if market will take out of these lows, the potential pattern will be erased, and the chances that market will continue move to the upside will not be really significant. They will become much smaller than now. Here is also current trend is bearish, but it has not been confirmed yet. So although market right now stands at below the MACD predictor, I do not have it on this chart, but if you will draw the MACD, you will see that this candle stands on the side of the bearish trend. But that is the first candle below the MACD predictor, so since current trading session hasn't been closed yet, the trend is also unconfirmed on the bearish side. Also guys, today is the last day of the January, so this could be really significant for the higher time frames charts. Well, on the 4-hour time frame chart, we see how market has accelerated right to the weekly pivot support one. That's why I do not very like this action. I prefer to see something of that sort better, something of the ABCD pattern, because this is really too fast action at the right shoulder, because on the right shoulder we usually should see the weaker bears. So here's the bears should be stronger when just the first move down to the head happens, because bears, how the in general head and shoulders pattern works, bears thought that this is the downward continuation trend, and here they are stronger than the bulls. This usually also the volumes confirm the downward action, but here we would like to see the weaker bears action. But here this is a bit different action. So you can see that here it's almost, as we could say that this action is even stronger than here, and that is the risk factor. In general guys, when you see this thrusting action right to the weekly pivot support one, as we said yesterday, would not want to see that action prior to taking a long position, because that increases the chances that market will take out of these lows and continue move lower. Well, that is a negative sign for any bullish development. But still, as you can see, market now holds at the support, and as we have this situation, we should discuss the possible patterns. The one pattern that I see here is the possible double repo buy right at the weekly pivot support one, and the potential value of the right shoulder. So you can see it thrust down. It's not very perfect, since here we have a bit meaningful retracement, but anyway, all action stands below the 3x3 moving average, so we didn't have any crossing of the 3x3 within the retracement. That's why in general this thrust is acceptable for the possible double repo. Another moment that makes this setup is better and more reliable is that the second bottom of the double repo stance creates the new low compared to this one. That also makes the double repo better, because the sellers, the bears, still have the positions, since they, as you could say, this market has renewed the lows. Maybe some breakout traders have entered with this possible move, and now they are still here. So in fact, I did not see any other patterns that could work. And despite all the negative moments that we could get here with this thrust down, so this is a bit situation with the greater risk for the bulls. But despite all these moments, guys, as we have really very tight, we could place really tight stop, we have really small risk. I think that in general we could try to trade it, and if market will confirm the double repo, you could even get less risk if you will stick particular with the double repo pattern. Okay, and when market will confirm it, and if it will confirm it, well, in this case we have a really big advantage, because the double repo failure, if you remember, is also the Jordan directional pattern, and the failure of the double repo will give you early signal that market probably will take out of these lows and will continue move lower. So keep an eye on this potential pattern, because it carries twofold utility. The first one, it could give you the chance to take the long position when the market will confirm the double repo with a very small risk. And if we will imagine that some miracle will happen and market really will turn to the upside, continue moving, will confirm this head and shoulders pattern and start move to the upside, we will get the really tremendous risk reward ratio. And the second moment is that if even double repo will fail, that will also be the signal, and it will point on the taking out of this loss. This will be early signal, and we will understand that this pattern probably will fail even before this will happen. That's why I think that this current situation on your currency is really worth of our attention. So keep an eye on on the situation, because the situation with the double repo will be resolved, I think that within the few hours in this hourly chart, and with the 2 or 3 hours we will get either confirmation or maybe even the double repo failure or something of that sort. So within the today trading session, I see nothing more than just keep an eye on this potential support area. So we stand at weekly pivot support 1, but more significant is that this is the crucial moment, the break-even point for the possible reverse head and shoulders pattern, and in general for all short-term bullish sentiment. That's the first moment to watch for. And then second, keep an eye in particular on this double repo pattern.